Hello, my name is Megan Harms, Chartered Professional Accountant, and today we are going to be discussing business expenses for sex workers from a Canadian perspective. What does the Income Tax Act say? Sections 9, 67, and 18 suggest that business expenses are deductible insofar as they are incurred to earn business income. We'll stop there for a second. If you're watching this video first, please note that CRA does consider sex work income to be business income, just like any other self-employed occupation in Canada. Moving forward, the expenses that you declare must be reasonable. The business itself must carry on with a reasonable expectation of profit. Expenditures that are personal in nature or from which you derive a non-business use will not likely be deductible. For a business to be a business and not a hobby, it must be a concern in the nature of trade. So that means it needs to be operating profitably, or there needs to be a foreseeable time that a reasonable person would expect the business to be operating profitably. What about expenses that are part business and part personal? For expenses, such as cell phone plans, that may be used for both personal and business matters, reasonableness and methodology of calculating the percentage allocated to the business activity must be proven. For example, if you are on call for self-employment work 8 hours per day, 5 days a week, that is 2,080 hours in a year. There are 8,760 available hours in each year. A reasonable percentage of cell phone expense could be 23.7% using this methodology of calculation. Essentially, what CRA wants to see is that you're allocating a reasonable percentage of the expense to your business. Lots of sex workers work out of their homes. So what about home office expense? Business use of home expenses are deductible under subsection 1812A to the extent that the workspace is either the individual's principal place of business or used exclusively for business and meeting clients. Business use of home expenses are recorded as a percentage of use. Generally, the area of the workspace is divided by the total area of the home to calculate the percentage to apply to rent, mortgage interest, property taxes, utilities, etc. If you use part of your home for both your business and personal living, calculate how many hours in the day you use the rooms for your business, and then divide that amount by 24 hours. Multiply the result by the business part of your total home expenses. Let's talk about some specific applications of the Act to sex work businesses. Common expenses for sex workers include condoms, lubricants, personal care supplies used for clients, such as shave kits, soaps, and other hygiene items. These examples would all be wholly deductible, as there is no personal utilization of these items. Also common are travel-related expenses, such as hotels, taxis, Uber trips, and airfare. For travel, you need to maintain a travel log that supports the trip or stay within a revenue source. For example, if you're touring in Toronto, you should save all the expense receipts from the Toronto trip in an envelope, and then staple the receipts from bank deposits made in Toronto. That ties the income and expenses together while maintaining client anonymity. For Ubers and other travel, if you work out of a central location, like a strip club or parlor, the trips to and from work are not deductible. You can deduct trips as you travel around to clients through your shift and earn income. The rationale for this is that Other Canadians that are employees, they do not get compensated for their transportation to and from work. They generally do not receive reimbursements from their employer for the to and from work trip, and that trip is not deductible in any form on their tax return. One of the most contested categories of expenses in relation to sex worker tax returns are the beauty-related expenses. Sex workers claim that they need to maintain a certain appearance standard in order to be marketable and generate revenue. We agree with this argument, but the Income Tax Act and the related interpretations coming out of tax court are a lot more strict. We expect that clients that are claiming beauty-related expenses will receive numerous challenges under audit by Canada Revenue Agency. These are two examples of beauty-related expense tax court cases that have been challenged. In Weber versus the Queen, the onus was placed on the performer to demonstrate that the purchases of stage costumes, wigs, and related makeup were used exclusively as a requirement of the profession in order to be deductible. Clothes, makeup, and other beauty items available for use in civilian life will not be deductible. So what about nails, lashes, and other semi-permanent treatments? Currently, there is no published case law on this. In Riley versus the Queen, the judge stated, evidence would be required as to what percentage of the use of the item was for personal purposes and what percentage was used for business purposes. CRA is also very clear that the burden of proof on this is quite high. Medical expenses. Sex work is a demanding job, both mentally and physically, so it is common for workers to seek out therapy services, physio, chiro, massage, or require prescription drugs of some kind. For these type of expenses, they do not get deducted on the business schedule. Add up these expenses separately and put them on the medical expense schedule. In order to derive a tax benefit, the medical expenses must be more than 3% of your income. Please note that to be eligible, massage therapists must be RMTs, and currently in British Columbia, counselors must either be psychologists or registered social workers. Please check Canada Revenue Agency's eligibility list on medical expenses for specific clarification on the deductibility of therapist expenses in your province. To integrate this into practice, let's look at some case examples. Lisa is a dancer at Number 5 Orange and also does webcam work on Chatterbait. Lisa takes Ubers to and from the club. Sometimes, Lisa will take Ubers to private parties or events that she is contracted to dance at. Lisa buys all of her own costumes and pleasers. She is also responsible for her own promotional posters. Lisa hates wearing makeup, nails, and lashes, so she only keeps her makeup in her locker for work and wears removable nails and lashes. Lisa lives in a 300 square foot studio and uses approximately 50 square feet for her dedicated camming area. She buys decor and props for camming. She cams 6 hours a day, 5 days a week. Her rent is $2,000 per month and internet is $100 per month. What would Lisa be allowed to use as expenses? So let's look at what's allowed. Ubers to and from special non-club bookings, pleasers and costume-related outfits, removable nails and lashes, the percentage of home office expense pursuant to the calculation below, photography and promotional expenses, props for camming, decor for camming, and a reasonable percentage of cell phone. What would not be allowed are the Ubers to and from the club to home, and makeup with any possible personal use. Let's look at another case. Jack is an escort. He maintains an in-call in his 2-bedroom condo in Cole Harbour. He uses 300 square feet out of the 600 available square feet for exclusive work use. Jack's rent and utilities are $3,500 a month. Jack sees very affluent clients that have high expectations of service. Jack keeps a fully stocked bar for client use exclusively and has professional cleaners in his space twice a week. Jack buys very high-end linens and decor for his client space, but no one individual item costs more than $500. Jack keeps a separate cell phone for work. Jack occasionally travels to Toronto and stays in luxury hotels to provide services. Last year, Jack bought a new iPhone and laptop exclusively for work. Jack advertises extensively on Trist and buys ad space on Perb. Let's look at what would be allowed for Jack. He would also be allowed to deduct a percentage pursuant to the below calculation of home office. He would get all of his work cell phone costs, airfare to and from Toronto, hotel and 50% of meals while in Toronto. He would get a percentage of his cleaner expense. He would get all of his sheets and decor that were under $500. He would get 50% of bar and liquor costs for client consumption. And he would get all of the ad space expenses on Perb and Trist. Not allowed. iPhone is a business asset, not an expense. Laptop is a business asset and not an expense. These items are dealt with on the asset schedule. So Jack would get what's called capital cost allowance, or CCA, depreciation related expense on those items. I hope this presentation has given you additional clarity on eligible business expenses within sex work economies. My name is Megan Harms, CPA, CGA, MA. I'm currently a doctoral student at Athabasca University Faculty of Business. The contents of this presentation are not to be considered professional advice. As everyone's tax situation is unique, professional advice should be obtained whenever you are unsure how to file your tax return. Please see www.meganharmscpa.com for additional resources on taxes for sex workers.